First of all, let's just deal with the details as why you continue to see an expectation that the pound will go lower from here. We're kind of flirting with this 122 line. What's going to take to get us down to that 115 line?
I think we see a number of risks for sterling going forwards. Politics, which has gone relatively quiet recently, we think reignites as a risk when Article 50 is triggered. Our assumption is still that's by the end of the month. Economics, similarly, we think having seen the consensus forecast move up in a straight line for 6 months for growth this year, markets are perhaps becoming a little bit complacent on the economy. Data surprises seem to be flipping over from positive to negative, and I think at some point expectations for the economy overshoot to the upside, and the risks therefore flip to the downside, and we think we're probably close to that inflection point now. So both politics and economics, I think, risks turning negative for sterling going forwards, and we think therefore, having had 2 post-referendum legs lower, the greater risk is that we have a third.
Adam, in theory, that should act as some sort of an insurance policy, i.e. it should provide some sort of forward momentum for the export story. Is actually that going to happen, though? I.e., how big a positive is this? Because the consumer's beginning to feel the effects of the imported inflation story. Is there something that's going to balance that out?
In terms of volumes, we think probably not. From exporters' margins, it's a very positive story. But what we see consistently the world over is that economies respond less than they used to exchange rate shocks, both positive and negative. We've seen that in Canada recently, we've seen it in Japan recently, and I think the UK will be the same. We're just at the point now, 6 months after the move, that we ought to be seeing some evidence that export volumes are picking up if history was repeating itself, and we're not. In the UK trade data, prices are up 15% year on year, volumes are essentially flat. So I think if there's another area where there is scope for disappointment, it would be the dividends that the fall in sterling pay for the real economy, which we think will be a lot smaller than expected. So
presumably then, the Governor of the Bank of England won't be particularly pleased if we do see your forecast coming true?
No, and I think we would question the tilt to the upside that the forward curve has at the moment. So the market has written off all prospects of easier monetary policy and ultimately prices in the next move being upwards. And we think the risks are a lot more balanced than that. We certainly think we'll go through a debate of whether the next move will be down going forward from here.
Adam, how do I factor in what is going on with the political story surrounding this exit vote? We have seen the House of Lords kicking back to the Prime Minister a bill that includes some sort of realistic prospect of a decent, meaningful vote for Parliament on the deal that is ultimately done. If that's the case, then almost there is this game theory idea built around that actually some sort of a bad deal is one that the Europeans will progress because they will want to see Parliament kicking it back. They will want to see ultimately that happening, and as a result of which maybe Brexit not taking place. How do I kind of factor the politics back into my FX story?
I think ultimately this should prove to be a relatively short-term distraction and not much more than that. In all likelihood, we think the Commons will still vote the bill through without the Lords' amendment, so that will be the end of that. If the Lords' amendment does survive, then even then, in all likelihood, the meaningful vote, so-called, that the Commons is likely to get is likely to be so close to the 2-year deadline itself that realistically the only choice they have is to accept the deal they're being shown or accept there'll be no deal at all. So realistically, this is a short-term distraction, but I think ultimately it will prove no more than that. The time scale will remain Article 50 by the end of this month and exit within 2 years. So, as I say, I don't think this is likely to prove a major driver for sterling. There are bigger issues.
OK, one quick question just on the politics, to stay with the politics. How would sterling react if Theresa May were to call a snap election?
I think it would probably react positively on the view that if we were to have a snap election, which is not an easy process, let's remember, if we were to have a snap election, it would probably see the current government returned with a larger majority and stronger government going forwards, and that would generally be a positive thing. But the process of getting to an early election, of course, is not an easy one now. The UK has fixed-term parliament, so it's not something that I'm figuring into my thinking going forwards as a likely scenario.